Well, thank you so very much for staying with us. You're still watching Business Nigeria. Well, Nigeria's oil and gas sector is entering a new era with local oil companies now accounting for more than 50% of the country's crude oil production. Now, this represents a sharp increase of over 10% from about 40% the share they held before international oil majors began pulling out of onshore and shallow water operations. Now, this marks a significant shift in Nigeria's energy landscape and positions indigenous firms as key players in the federal government's ambition to raise daily crude oil output by one additional 1 million barrels by next year. Now, a new report quoting Nigeria's Upstream Petroleum Regulatory Commission earlier this week, particularly on Tuesday, according to the regulator's data, local oil firms now account for over half of Nigeria's oil production, from around 40% before the oil majors completed their divestment programs. The rise of these indigenous operators follows a wave of divestment by international oil companies such as Shell, ExxonMobil, ENI, Total Energies, which have sold off onshore and shallow waters assets to focus on deep water operations. Let's talk to Mr. Enebi Okpalua. He is the head, Natural Resources and Climate Governance, Budget Foundation. He joins me live from Abuja. Great to see you again after a while. Good afternoon.
Yeah, it's been a while, Tolu. Thanks for having me again. It's always a pleasure to be here.
Well, oil and gas companies are declaring profits, real profits. Yesterday, I was reading out what Wando was doing, other companies, even the local producers, despite a challenging environment. Let me ask you, was this expected in your thoughts?
Well, I would say several factors contributed to the oil companies declaring profits. All right. So for Nigeria, it was a multiplicity of factors, from production that improved in 2024. If you look at the early 2024, production started around 1.2 or 1.3 million barrels per day, but by December had averaged around.
The TVC News at 7 and the TVC News at 10 are not like any other news broadcast.
It's the big news hour, the hour for the big breaking stories.
We've got some of the best reporters on the field,
taking you through as it happens.
Petroleum pricing, foreign exchange gains, and other market forces, they contributed to making the performance of oil and gas industry, companies in Nigeria look that well. So largely increase in domestic production, oil pricing. Last year, it averaged for largely above around $80 per barrel in terms of crude oil pricing. So it was a good year for the oil and gas industry in Nigeria, and that is what contributed to the profits that they declared.
Okay, I think that's a good way for us to start our conversation. But like I asked my earlier guest, let's stay with those factors. And are we still very much in line with the Petroleum Industry Act, which is supposed to reactivate and reshaping this industry in its totality?
Yes, so the Petroleum Industry Act was enacted partly to achieve things like this, to ensure that there is clarity in fiscal rules guiding exploration and production of crude oil in Nigeria. It was supposed to foster certainty, foster clarity, invite or make Nigeria attractive for investors, and that is beginning to happen. We are beginning to see some interests in Nigeria due to the PIA 2021 and other executive orders that were signed by the president to improve registration or management and operations of oil and gas firms over the last 2 years. So these have contributed. Yes, the PIA has contributed from 2021 to now. We are still in implementation phases. We are not at El Dorado yet, but I think things are beginning to shape up in that aspect regarding what investors feel about the local petroleum industry market in Nigeria.
What about cost of production? That has been something that has been worrisome for some time. Ever since I've stayed with this industry, covered this energy industry for some years, I know we've been talking about costs of production. Are we working to bring that down to be competitive with international partners?
So the government has those intentions. Yeah, it's on the table. But how that has succeeded, I can't really say for now. And Nigeria is still one of the highest countries when it comes to cost of production. I think we see average around 29. No, it's even higher than $30. I think somewhere around $40 per barrel when it comes to offshore. $40-50 per barrel when it comes to offshore assets, and then onshore around $20 to $30 per barrel. So we are still one of the highest. In Saudi Arabia is around less than $10 per barrel. These are our competitors, all right? So there is still need to reduce those factors that increase our cost of production. Before the PIAs, one of the things that added to cost of production were things like post-landing costs, and then there were things like throughput, petroleum collection, for all those things that eventually led to the final cost of petrol. All right. In the upstream, we are looking at some taxes, some other insecurity factors, other dues that oil and gas companies have to pay, and those things add to the cost of production. It's not just the technical aspect, but other administrative fees that need to be addressed. So if we want to be very, very competitive in Nigeria, then we have to start looking at those aspects of the production. There are many factors that contribute to those baseline costs, and if we are going to be more competitive, we need to look at insecurity and other fiscal and administrative rules that we would like to address for oil and gas companies. That might help us be a bit more competitive.
Well, a recent report, like I said in my introduction, and I'm sure you heard, shows that local firms now produce 50% of Nigeria's oil. Your thoughts around this? What does this development really mean for the entire industry going forward? To my mind, before you make your point, I'm thinking that our Nigerian first policy seems to be moving very fast.
I might disagree with you on that. So it's good, but it's a mixed bag for me. So yes, it's good that we have local companies taking up more share of local production, and that is fantastic. That is a good development. But that is largely because oil and gas companies international oil and gas companies are divesting. So we need to, why are they divesting? What is the reason? And there are a lot of elements that, apart from the challenges and insecurity with onshore assets, there's the current trend of energy transition. And so some of these companies have a policy to shift from fossil fuel production in the next, or reduce their stake in fossil fuel production in the next 3 decades. Right? Some of those decisions will start kicking in even by 2030 this year, depending on the country and the company. So those are some of the issues that have affected the divestment, and that is why Nigerian firms are now taking up and filling the gap, which is good. I think with Nigerian firms filling this gap, some opportunities that I see are perhaps some form of true local content in terms of the kind of production we do, some true capacity development, some true tech transfers. And I think we need to look beyond just the ownership of those of the companies, of the local companies. We need to also look at what forms the technical personnel in those companies. Before now, or for several decades, Nigeria has relied on foreign technology, foreign personnel to drive our oil and gas industry, but that is beginning to change gradually over the last 1 to 2 decades. And so we are beginning to see local companies take, but in their internal capacity, we need to start seeing how we can drive the local content share in those local companies to a point where we can now say we are truly independent of foreign technology and foreign capacity. That is one aspect. Another thing for me is that, or what some of the downsides on it, that I feel we might be a bit late to this party. And this is why I say so. Like I mentioned earlier, we have the energy transition that is kicking in. We have companies that are beginning to move away from this industry. And so, and I'm looking at long term. In the short term, because of the foreign trade wars, the far right movements in Europe and the US, the fossil fuels is beginning to look like a lucrative investment. That's in the immediate term. But when you look at long-term projections, then it's still strongly projected that we'll be moving from fossil fuels. Now, if we are building capacity in the oil and gas industries to start retaining that capacity in Nigeria, in an industry that is in its evening, all right, in its nighttime, perhaps we are late to the party, and that is my concern. We have oil and gas companies that are putting in investments, and we also have a decarbonization policy in Nigeria that has to reduce uh, carbon emissions, reduce methane emissions, and then also try to now scale up investments in renewable energy production. And then we also have a gas transition master plan. So there's a whole lot we are dealing with. And that's why I feel perhaps if we had come into this market as major players, perhaps 2 decades or 3 decades earlier, that might have been very, very good. At least the kind of capacity would have maintained now in Nigeria would have been much more efficient, at least to be competitive regionally and probably on a global scale. But for me, I feel yes, it's a good development, but we might be a bit little late to this party. And I think we should start looking forward. We should perhaps start looking at how we can scale up in the mining sector, transition mineral sector. Yes, we have capacity growing in the oil and gas sector, but the future is in metals, the future is in minerals, the cobalt, the nickel, the lithiums, which we have enough deposits for. So how are we scaling up? What is the capacity of Nigerian companies, the Nigerian personnel in those sectors? Are we going to wait till perhaps the next 6 decades after our resources are almost exhausted before we now start scaling up capacity in that area and now having indigenous companies control that sector? I think we should need to be proactive in how we think. It's good for the oil and gas sector. We might build capacity, yes, but I think we should be much more proactive in how we address those kind of optics.
I know that in your capacity as the head natural resources and climate governance at Motit Foundation, a lot talks around energy transition, clean energy, efforts of government, and all of that. But I'm one of those, I don't know, I like your views around that, that believe that we need crude oil to also move away from crude oil, to diversify our economy from crude oil, because the resources will come from there and all of that. So are we on track when you look at energy transition plans for a country like Nigeria? Because we still have reserves, for enough of reserves that will still take up some number of years, if you agree with me.
Yeah, so for countries like Nigeria, I always say we have a double-edged situation. Let me come in to use that phrase. So we have a resource as a major backbone for our economy that we cannot let go. But we have a global market that is now beginning, a global economy that is now shifting from this resource. And for Nigeria, like I always say, the goal around transition is not really because of the amount of emissions we produce. Technically, we don't produce enough emissions to shift the needle in the global scale. However, it's a matter of economic survival. If the world shifts from a oil-based global economy, then Nigeria will begin to run into problems. It may not be in the next 1 year, it may not be in the next 2 years. Perhaps from 10 years, we start seeing the large effects. We have new regulations coming up in Europe, and I mentioned Europe because Europe is our biggest market when it comes to our crude oil. They account for at least 40% of our crude oil export. And we now have emission reduction standards that are kicking in as early as 2027. These standards will begin to limit the amount of fossil fuels, crude oil and gas that the European Union. So these are concerns that we need to look into as a country regarding how we proceed moving forward regarding our energy transition plan. Can you still hear me?
Yes, I can hear you clearly. Go ahead, please. I can hear you clearly. Are you there? Mr. Okpalua, can you hear me?
Okay, I think you're back now. Can you still hear me?
Yes, go ahead. I can hear you.
Okay. Yeah. So I said these are the considerations we need to make regarding how we look at our energy transition plan. Now let's bring it home.
Okay.
For now, we are still a fossil fuel dependent economy. We depend on crude oil and gas is our major let's say stake in our transition plan. It is practical for Nigeria to take advantage of those resources to power its economy and to drive a responsible transition plan. The nexus, where I believe the nexus is, to be how we are preparing with the current resources we have, how we are now channeling that into efforts to diversify the economy, to diversify our dependence from. I'll give an example. Some people may not like my example, but for now, that's the closest. Dubai developed using crude oil, but I think as of 6 to 7 years ago, crude oil or oil and gas accounted for less than 4%. To use that resource to grow their economy to the extent that they are being fully diversified. I think we should begin to think in a similar pattern on how we can take our
All right, then we will still try to connect Mr. Okpalua while we wrap up this conversation. Interesting one, talking energy transition there. Yes, please make your point. You're back. Please make your point.
All right. So I was saying that we should start looking for how we can take our current resources and then prepare our economy to diversify from its excessive dependence on crude oil. We can use that resource now, but we should do it in vision to win ourselves from that excessive dependence.
All right, your outlook for the industry with regards to increased production and, of course, revenue generation.
All right, for my outlook is that presently production seems to be having an upward trajectory, which is good for Nigeria. My concern for now is the pricing.
Yeah.
The price has dropped from somewhere from 18 to 25% since early this year. It averaged around $80 plus last year. Right now, around $65, and analysts say it might maintain the range of $60 to $65 per barrel throughout this year, depending on what happens between the trade wars. That is not really healthy for Nigeria. Our budget was benchmarked at $75 per barrel. At that time, I think the price was around $77 to $80 per barrel. We didn't envisage that the Trump trade wars would have this much impact and last this long. The uncertainty has increased globally. There are issues with global demand dropping. China's economy is also having issues. So globally, the forecasts are beginning to be a bit less bullish than before. So these are concerns I feel that may affect revenue for the country. If the current price subsists throughout the year, then we might begin to look at a larger budget deficit, meaning that it's difficult for us to meet our budgets. However, price aside, in terms of production, I think we are on a path for increased production in Nigeria. I think the country has the capacity to do that with the reforms and with additional efforts to curb insecurity. We can increase production. The challenge will be, like I've always said, how we manage that with our OPEC approved quotas. Since oil price is down, there might not be any new intentions by OPEC to increase our quota. I think in 2023, our quota was 1.7, now it's 1.5 million barrels per day. And right now we have hit that quota already. So if we're going to increase that within the arrangement of OPEC, then something has to be done. But otherwise, I think we are on the path to increase our production if we curb issues around crude oil theft and insecurity.
Mr. Enebi Okpalowa is Head Natural Resources and Climate Governance with Budget Foundation. Thank you so much for joining us on the program. We really do appreciate this. And have a lovely weekend and a holiday, of course. But we'll be here, though. Enjoy yourself.
Thank you very much for having me. It was really a pleasure.
All right, then. All right, well, let's see. It's time to review trading activities at on the floor of the Nigerian Exchange Limited. And joining me to do this is an equities trader at Rostrum Investments and Securities Limited, Mr. Dele Sanusi. Mr. Sanusi, good afternoon and thank you so much for your time. The market is closing for the layer holidays in green. How does that come to you? I can see stocks like